Eric Muathe at Muathe.com with another video in this series, the Muathe Virgin Breakout, because I just saw a stock that gave me an opportunity of expanding this a little bit further. Not actually expanding it, but trying to reinforce some of the things that we cover in this video series. Again, this is the video series on my YouTube channel, and right now about 6 videos or so, and I just saw a stock that gives us an opportunity of revisiting this Muathe breakout strategy. All right, let's go to the stock. It is VBLT. Now, the one thing I want to talk about here is, so of course we know what we are doing here is we are drawing, or I guess let me put it this way, we are looking for a stock that is setting up in such a way that its moving averages are flat. So the best ones are the ones that you have a flat, the flat moving averages, both of them being flat. So the best ones are gonna have both moving averages, and generally this is gonna be your 200-day moving average, and the lower one tends to be the 50-day moving average. The reason why it's set up like that in this strategy is pretty much because you're expecting at some point there to be a crossover between those two moving averages, where the 50-day moving average eventually moves above a flat 200-day moving average. So pretty much you're anticipating this crossover between the 50 moving above the 200-day moving average. So we know that's how this sets up. But what I would like to revisit here, and I discussed this in the series, is pretty much one aspect of deciding what your buy point is, and this is an important way of understanding this. So whatever your flat moving average, it could be that you're using the 50-day, because sometimes both of them are not flat. Sometimes only one of the moving averages is flat, and I'll show you an example in this very chart here. So either both of them are flat or one of them is flat. But your buy point, and this is critical in understanding how to use this, your buy point is always going to be the highest close above, or the highest close when the moving average was flat. So during this period here, this period, when you got a flat 50-day or a flat 200-day moving average, you want to take the highest close during the period. So that's the period to watch for, when the moving averages are flat. So whatever the highest close, if it's a daily chart, the highest daily close while your moving averages were flat. As an example, I'll show you in this particular chart here, we see an example here. We have a generally flat 50-day moving average. Now, let me draw that a little. So we have a generally flat 50-day moving average during this period. So this is the highest daily close right there during the period when the 50-day moving average was flat. So that's what I call a flat pivot or a flat buy point, which is this point. Why is that important? Because if you think about it, even just from a logical standpoint, the only way these moving averages can coil upwards is with a breakout. And the only way that can take place is by the stock moving above the highest close during the flat period. So once it breaks out and closes above the highest close while the 50-day moving average was flat, then that's gonna be your buy point. So here you see that the stock in this example did explode from about 370 all the way to the highs of about 7.5. And of course, this is not a typical case. This is a very good example. Of course, I'm cherry picking, but it does illustrate that the only way you can move the 50-day moving average is by an explosion in price, and the idea here is to take advantage of that price explosion. Let's put it another way. So you have a flat moving average, right? And at some point you anticipate it wants to coil up. Why can't we take advantage of that? The only way it can coil to the upside, it's the only way, there's one way, is by breaking out. And what I'm saying is, the way you calculate your buy point is take the highest close during the period when the 50-day moving average or whatever moving average was flat. So that's the period. You want a breakout above the highest close during this period when the moving average was flat. So here we see a perfect example. Now, in the current market, we see that there is a slight indication here that you have a flat 200-day moving average. Now, if you're really, in fact, let's take a look at a 6 months. This is 1 year daily. Let me go to a 6 months daily so we can see whether, all right, and this does give us a little bit of a better view. The previous buy point was this buy point here when the 50-day moving average was flat. Generally speaking, this is flat. I mean, it's not like flat, but it is as flat as it gets. And so our buy point is this breakout. And you can see that it broke out and followed through. There was a breakout, a close above that. The second day it continued higher, which is a show of momentum and confirmation of the breakout. And then on the third day you had this explosion. Of course, this is an extreme case. But now I can see here that we can use, there's a period right somewhere here. And this is gonna confuse you, but it shouldn't. The way I would look at this is take the highest close while this is generally flat, and you can actually even use a lower buy point. There are gonna be periods, and I need to illustrate this just so that if you ever come across this situation where you have a flat moving average, but your highest close sometimes tends to be a little bit either at the line or even below. But if that's the highest close while the moving average was flat, then any breakout, if it's below or if it is above the line, irrespective, you want to take the highest daily closing low, the highest daily closing high, excuse me, while the moving average was flat. Sometimes it's around the line, sometimes it's above the line, and sometimes it's below the line. It doesn't matter. In this particular example, what I want to talk about here is, I think here you have an excuse because the 200-day moving average is trying to stay flat. I would even use this daily closing high right there as my buy point. That so happens to be at 4.59. You can use that as your buy signal because it is the highest daily close since it started trying to go flat. Otherwise, as far as I can see visually, this is the period where definitely it is flat. Definitely here we have a flat 200-day moving average. So during this period, this is the highest close. So you'd have to wait for a breakout here in the 680 zone, which is far off. So if you want to cheat, I would use this recent daily closing high, because generally speaking, you got generally a moving average that wants to be flat. Now, this example gives us a very nice opportunity to discuss something else. Here we have the weekly moving averages, and on my charts you got the 8-month EMA or 8-week EMA, exponential moving average. I also have the 13-week EMA, and I have the 34-week EMA. Okay, now I want to show you something pretty cool. If you take a look at the 34-week moving average right now, it is flat right there. Now this is a 2-year weekly chart. This is flat. So during this period when it's flat, this is the highest daily closing high right there, and it is at 4.90. So you can use the weekly chart in this particular example because you have a flat 34-week moving average. Any breakout above 4.90 is a legitimate trigger to go long. Now this is 2 years worth of data. Let's take a look at a 1 year worth of data. So let's go here to the daily chart again. Let me change this to weekly, and it doesn't give us a very good, I think I know why. Hold on, I'll fix that. Let's go to 1 year of data here. Alright, and you can see that this is flat. You can also see visually the possibility that at some point you're gonna have the moving averages cross over. And let me show this by changing colors here. This might eventually move higher with a breakout, and also we can see that the other moving averages, the 8 and the 13-week moving average, could also move higher. So we could have a crossover. So a breakout might suggest that there's going to be a crossover. That crossover could be successful. So what we do is take the period when the moving average is flat, all right, like right now, take the highest weekly closing high during the period when it's flat, and if we ever get a breakout, in this example, this is the close at 4.59, you set an alert. Any breakout above this price is going to be another Muathe Virgin Breakout. The only way this can cross over, the only way the moving averages can cross over, is with an explosion in price. Remember, if it's a gradual increase, then it's not going to be a very meaningful manipulation of the moving averages. The only way the moving averages can cross over, just like they did here, is with an explosion of prices. Okay, so you are anticipating that if it moves above 4.59, that would suggest that now the only way that the moving averages could cross over is with a price explosion. So you want to play that in case there's that kind of an intention. But the way you know is if the stock moves above 4.90. Excuse me if I made a mistake on the price, but this is the previous current weekly closing high over the last couple of weeks, in fact going back to the beginning of the year. So it's a flat 34-week moving average. You use the highest weekly closing high while the moving average was flat. That is what I call a flat buy point or a flat pivot, and in this particular case it is 4.90. Any breakout above that price, you can take up a position and see whether you get an explosion in price. And before I close out this video, there was another example here. You can see that there was a period right there, or even somewhere right there. Either one works. In fact, if you want to be really strict about this, you have to insist that your moving average is flat. Here we have a flat 200-day moving average. So this was the highest daily closing high right there at about $7. Once it moved above that, there was an intention of the moving average coiling up, the 50-day moving average coiling up. There was a slight crossover, but what we are focused on here is this price movement during this breakout. So we are anticipating, and this was correct, that the only way the moving averages would coil to the upside was with a price explosion right there once it moved above that range. So again, your buy point is the highest daily closing high while you have a flat 200-day moving average, which was somewhere around there. So once you get the breakout, of course you consider that a buying opportunity for a short-term trade, because generally speaking, more often than not, you are going to get an explosion in price, which is exactly what we get here. I hope again this makes sense. Keep in mind, it works for the weekly charts, daily charts, hourly charts. It doesn't matter. I believe I've researched this more on the daily, so I'm pretty sure on the daily it works. I'm pretty sure it works on the weekly based on my limited experience, because there are not that many examples. But if you have a flat moving average on any time frame, if you see a breakout, that's when you are going to know that there's probably something that is going to influence the moving averages to coil up. And what you want to do is on the stock as it is breaking out, because that is precisely when the moving averages might start coiling up, and the only way they coil up is with an explosion in price. Now, before I go, let me just add one more thing. Here we can see that the stock has a history of staging sharp moves on the RSI. What that means with these sharp moves on the RSI is that it has a tendency of exploding. And here, so with a breakout above the recent daily closing high there, during this period when we have a generally flat 200-day moving average, and again I gave you that buy point of 4.59 on the daily. All right, call it right there, this daily close, any breakout above that would suggest that maybe now we might get another RSI explosion with a sharp angle of penetration. And if you want to understand what I mean by a sharp angle of penetration, take a look at this playlist on my YouTube channel, Relative Strength Index, and the method is called Relative Strength Index Angle of Penetration. So I have a lot of videos discussing this for those of you who might not know what that is, but that's pretty much what I'm talking about here. And again, that's what I wanted to cover, in that the highest daily closing high or the highest close during the flat period tends to be your buy point, just like it did here. This is the daily, just like it did here. This, when the 200-day moving average was flat, the breakout was successful here. And I also was glad to see an example on the weekly where we have a flat 34-week moving average. So the highest weekly close is here, and so any breakout above 4.59 is a legitimate buy signal. Otherwise, keep in mind that I also mentioned the fact that sometimes you might find that your buy point or the highest close while the moving average was flat, so you have a flat moving average, and you might find that sometimes your buy point is either around the line or even below. But what you're looking for is the highest close while the moving average was flat. Any breakout above that is what you want to buy as a buy point trigger. Otherwise, I hope that makes sense. If you've watched the series, everything should be crystal clear. Otherwise, if you have a question, let me know. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ERCS. And so it is. Mwah.